So what's good, YouTube? It's your boy Azaka FX. As you guys know, I actually started the recent challenge where I'm taking $2 towards $100,000. And in the part one of that video, we were able to go from $2 to $6, which is the $6 you are seeing right here on the screen just before I went off grid. But now we are back on that challenge. This is the account. Mark the account number, at least for now that we are still on the send side. We're going to be remaining on send account until we get towards 50,000 cents, aka $500. And now, what are the milestones for me to actually get to that 50,000 cents? In this our trade too, we're actually expecting to take this $6 to $18. That is for our trade 2. That is what we're actually targeting, the milestone we're targeting. And then after that, 354, 4 162, and 5 486. At that point, we can now switch from what sent account to what standard account. Now it is actually very important to stick to every part of this particular series. Like I told you guys, it's not really going to be all about flipping anymore in these channels. The things we do behind the scene, I'll do my best to actually be including them in all these videos. That is for that. I'll go ahead and execute my position when one last criteria. I'm just waiting for one last criteria. Let me go ahead and explain some of the criteria of this trade, then I'll actually show you that one last criteria that I am watching out for. Now if that one last criteria does not occur in this video, I will still post the video because this is the reality of what being a trader. Now it is the reality of being a trader. Now that one last criteria, what is that one last criteria? Why is that one last criteria actually very special? In fact, what is all my criterias, and why is it that some moves I call them conservative moves because they're actually very safe, while others I call them aggressive mode? Because yes, they are safe, they meet all the criteria, but they are not. They are just about 70% win rate, which is still a very high win rate. I always call all my signals to the inner cycle, not just the signals to the inner cycle. I tell them what we are waiting for. Let me show you guys that one last criteria in our inner cycle first, how I explained it to them, and then I'll go ahead and explain the rest of the criteria in our trading view charts. If you've not subscribed, definitely subscribe to this channel. This channel is where we impact value no matter the cost, ladies and gentlemen, and we impact those value for free. Nobody in this channel is going to ask you to pay for anything. Nobody will also take any investment from you. We don't do account management. Everything is free. So if you're interested, our WhatsApp number is either in the description, comment section, or in the screen right here. Let's see how it actually goes. Coming to our inner cycle today, as you can see, August 10 today, on coming to our inner cycle, you will notice that what I called two particular signal, one on silver being this one and another on gold, and both rules apply on silver and gold because silver and gold is part of the family of the XAUUSD family. The very first criteria, like I said yesterday, we look out for is what bias, and that bias actually says XAUUSD buy, USD XSS no sell. Now I said note, this silver outlook applies only upon confirming a break of structure on the lower time frame, so that is the BOS on the LTF. If price to fail to return our entry, disregard the setup. It merely offers a fresh bias without the final lower time frame break of structure confirmation. Do not take this buy. And then for the gold setup, as you can see, I called this setup since morning, even before price got anywhere close to our POI. I said what? Signal on gold, same rule applies. Now let's go down to our charts. Let me explain some of the criteria, or rather all of the criteria that we are going to need for this trade. What actually makes a move conservative, and what actually makes, I called the signal about when price was here, price has not dropped it. That was at London session this morning. What actually makes a move conservative and what makes it aggressive? Even if a move is aggressive, that does not mean it is not safe. When we have conservative move, 95% of the time, it is actually going to go in our direction. Now, for a move to be conservative, it has to come from the weekly time frame, and then confirm that bias we got on the weekly time frame from DXY confirm that bias we got on the weekly time frame, that fresh bias on DXY on the 4-hour time frame. But then that takes a long time. Now in my chart, when we come to DXY, let's go to DXY. I want to show you guys something special so you guys know what I'm talking about. Let's come here to the daily time frame in DXY and let's look at my chart. In my chart, you will see that we have the weekly high, so the previous weekly high, and then the previous weekly low. This previous weekly high is the blue line, and then right below under it, you've got the previous daily high and the previous daily low in forms of what? These green lines, as you can see right here in our chart. Now, this move, obviously, when we get a fresh bias this week, it is going to be what? Is going to be what? Strictly a conservative move, because they are so close apart that you can't say it's definitely going to be a conservative move when we get a fresh bias this week. But as of now, we don't have a fresh bias this week. What we have is the bias from last week, which is still very valid. We can actually use the bias from last week to look for what? Entry. And that bias, lucky us, is also a conservative move, because what we got is from the confirmation of the weekly previous low that actually broke from the 4-hour time frame. Now keep watching all of our videos. A time we come, I will actually show you guys how I actually confirm my bias. That being said and done, now let's go back to what our tradable today, which is now gold, and we are going to be doing something top-down analysis from here. Now, the same way we don't have a fresh bias on gold, we still on DXY rather, we still don't have what? A fresh bias on gold. So this is our previous daily low, which is supposed to be our external liquidity. Call this external liquidity, and this is our previous daily high, which is also our external liquidity zone. Now, those are prices, as you can see, price has not come to any of them, so no fresh liquidity sweep, no fresh liquidity BOS. What, however, we can work with is the previous weekly's bias, which is actually varied, which is this green light that we want here. So when it comes to our tradable, a green line means that we are working with our previous bias beforehand, while a blue line means it's a fresh bias. Lovely, good and fine. Now we are aligning it. Note how we have aligned the previous weekly conservative bias that we got with today's bias from what? Silver. Now that being done, we say good, okay, this is the bias we're working with, and according to that bias, it is what? XAUUSD what? Sell, and USD XS. The next thing we do is we come to look for our POI, our point of interest. Our point of interest comes in forms of supply and demand zone, and in this case, our form of interest came from, I think, the 15 minutes time frame. It is clearer at the 15 minutes time frame. So good, this is it. Our form of interest, our point of interest rather, came in form of a 15 minutes order block. After price tapped that 15 minutes order block, as you can see, let me zoom in a little bit for you guys to see. When price tapped this 15 minutes order block right here, I needed it to break a structure, which is this particular line that you're seeing right here. So price actually broke the structure. As price broke that structure, then we look for the last point of supply in form of what? A supply and demand zone, which is now this zone with which we are entering off from, with which I call the signal, because I knew positively in my heart that if price comes back down, it will get to this zone and this will be our entry. Actually, there are two of them. There's a decisional one right here, and then the one I marked out is an extreme one. There's a decisional one right here, which is where price actually just starts and it seems to be respecting, but the one I marked out is an extreme one. Here is now what makes our strategy special. We are not just hopping in. Despite having all of these criteria, we are not just what? Hopping in. Now, I'll take a screenshot of this for, documentation purpose. Now that I've taken that screenshot, let me go ahead and explain the very last criteria. That very last criteria that I told them to wait for. We actually get that very last criteria from the 1 minute time frame. Now, when price taps, there's something called a BOS, a lower time frame. That same lower time frame BOS that I was talking about. This is how it comes. This is how that lower time frame BOS that I was talking about. From that POI, the first tap in that POI, this is the first tap in the POI, the valid structure we need it to break before I can now say in my heart that yes, this entry is fully confirmed for this particular zone will be up here. So that will be here, right here. this is the most valid structure because there's a displacement that pushed up. There's a displacement candle that pushed up before the massive drop to the downside. So this is that particular displacement candle right here. It pushed up, then we've got a massive drop to the downside. Then now I need it to, it actually gave this new structure here. It gave this new structure here, but then this is not as sure as this one. So even if price successfully break this one, I will still find it very skeptical because, mind you, we don't have a fresh bias, and as we don't have a fresh bias, we cannot just use any random break of structure. We need an actual solid break of structure. However, price can decide, since this is a decisional POI and this is our extreme POI. Our extreme POI tends to work more for us than our decisional POI. Price can decide to what, come and tap into this zone. Now that it has tapped into, when it finally comes to tap into this zone, the POI that we are going, the BOS that we're actually now going to be working with is this high, this fresh high. That is if it happens to be a high. It can try to keep going up, get to this place, fail to break this place. That same place will become our BOS. But then that will be this fresh high that we are now waiting for it to price. So price would actually do something like this. Let me give you guys a mock up. So it does not really matter whether price came and tear past it to collect whatever liquidity left here, but what really matters is that when price finally gives us that BOS we are going to use as our confirmation, it must break it like this. So on breaking it, it will pull back, and then we can now enter all the way to this take profit. You all know why that place is a take profit. So that will now make our entry this, our entry being here and up above here, targeting up above here. This is an insane risk to reward ratio. Now you might be asking, okay, where's now your stop loss? To get your stop loss, to get that valid stop loss, you have to come down to the 5 minutes and look for the significant low, so that you would not, sometimes when you place your stop loss in the wrong place, it will be difficult. The significant low is right here, so you just add a little bit buffer. So let me call this just below. You see the way I marked this one out? I marked one. Let me delete that. Delete. So this is the new one I marked out, because those are just outlook. So I'll pull it just below a little bit, just like that will now be our stop loss. Our risk to reward ratio for this particular trade is 1:7. 1:7. Ladies and gentlemen, let's see how this trade actually plays out. Watch to the end, and it's your boy Azaka. Just keep watching to the end. If you have any question, leave it in the comment section, or if you feel it's something you can't leave publicly, come to our DMs. WhatsApp number, it's on the comment section or in the description or right here in the screen. Ladies and gentlemen, so ladies and gentlemen, this is the trade, and it's that we're going to have to hold it when it hits TP. We're going to have to hold it when it hits TP. Now, it is paramount to say that yes, I did not maximize the risk to reward ratio, and you all know I set this stop loss just before the whole thing. But I'm going to hold it to the TP. I'm going to hold it to the overall take profit, at least to try and collect as much reward as I can get from this particular trade, or if bias changes beforehand, then I'll exit. But in all, it was actually a beautiful trade. I called it to the inner cycle, as you can see. It was a really lovely trade, and that is just it for this trade. I have to post this video today. So in the next part of the video, I will update you guys if I actually exited everything at this particular zone right here, or it passed it and I kept on holding it. Because sometimes when I look at the available criteria, I can decide to take more entries somewhere here, depending on what the market does. So we don't predict, we react. So when we react like that, we maximize it. Yes, I did not layer, no insane shit just here. This account is still very small for layering. This account is still, we just recently resumed this challenge, and we are going to hold it. So definitely subscribe if you want to see how I actually close this trade in the next part of the video. The essence of this whole challenge is not to prove to you that I can do it, but rather to educate you on how to do it. It's your boy Azaka. See you all in the next video. Ladies and gentlemen, I know I told you guys that this is actually the trade, and we exited already right here. Lovely trade. I know I told you guys that we are actually targeting for our next zone, which is at 18, but then the market gives us what it gives to us. This is where the account is now at 10. So there is that for this. You and I know fully well that the only reason this thing did not hit that particular 18 that we were targeting, that particular percentage that we are targeting, was because I told you guys at the start of the video that I did not maximize my risk to reward ratio. So that is This is a perfect example of what happens when you did not mark. Yes, you will be profitable at the end of the day. At the end of the week, you'll be very, very profitable. But then you are leaving money on the table. So in our next video, which is actually still going to come this week by the grace of God, we're actually going to be taking this 1010 USC that I have right now to the next thing that the market has to offer us. This is just the part 2. Mind you guys, we're trading to $100,000, which is a lot of money. So yeah, let's see what that video actually have. If you've not subscribed, now is the time for you to subscribe. And most of all, if you have any question, leave it in the comment section or come to our WhatsApp DM. We are always there to answer you guys, ladies and gentlemen. It's your boy Azaka. See you all in the next video.